Welcome to today's Explainer. I am so stoked you're tuning in. Today, we're demystifying something that can and literally will save your trucking business from total financial ruin. We're talking auto liability coverage limits. We're going to break down the actual numbers, run through some real-world scenarios, and figure out exactly what level of protection you really need out there on the open road. Because look, not having enough auto liability insurance, that is a visceral, terrifying threat. It could cost your business absolutely everything. One bad day, one severe accident, and boom, you are facing a business-ending lawsuit if you're underinsured. But how do you actually know how much coverage is enough? Well, that's the million-dollar question, isn't it? And sometimes it's literally $1 million. Okay, let's dive into this. Here's our roadmap for today. We'll start with auto liability basics, then look at the $750K minimum limit, jump up to the $2 million maximum, check out the $1 million standard, and finally guide you on choosing your coverage. We're going to use a bit of a Goldilocks approach today to help you find the coverage that's not too small, not too big, but just right for your specific operation. Section 1, Auto Liability Basics. Let's quickly cover the foundational stuff you need to know before we start comparing those different coverage tiers. Auto liability insurance. Simply put, this is the legal minimum coverage required for commercial trucks here in the US. Now, the absolute key phrase to remember here is third parties. This insurance protects against the damage and the injuries you cause to other people when you are at fault in an accident. You've got to remember, this doesn't cover your own truck getting smashed up, it doesn't cover your own injuries, and it doesn't cover your cargo. No. It is strictly about building a wall around your wallet to protect you from massive third-party lawsuits. And building on that, auto liability breaks down into two main buckets. On one side, we've got bodily injury liability. If you cause a wreck, this covers the other party's medical costs, their pain and suffering, their lost wages, the whole 9 yards. On the other side is property damage liability. This pays for fixing or replacing the stuff you actually hit, whether that's other cars, a building structure, or, city infrastructure like a highway guardrail. Both of these are absolutely crucial layers of armor for your business. Now, what's really fascinating here is how the FMCSA, the Federal Motor Carrier Safety Administration, scales these minimum requirements dramatically based entirely on what's in your trailer. General freight, that's got a $750,000 floor. Interstate trucking bumps it right up to $1 million. But if you haul hazardous materials, wow, the government demands a massive $5 million minimum limit. Turns out, hauling toxic chemicals is kind of risky. Go figure, right? They tailor the legal requirement directly to the potential risk of the freight itself. All right, Section 2, the $750K minimum limit. Here, we really need to talk about the danger of confusing legal compliance with actual full protection. So we are starting right at the $750,000 mark. This is the entry-level tier. It is the absolute baseline. And because of that, it's super common for brand new owner-operators trying to get their business off the ground on a really tight budget. The pros here? Well, they're pretty obvious. You get affordable premiums, which is a lifesaver for a tight budget, and it gets you legally compliant to haul general freight. But the cons? The cons are dangerous. If you end up in a catastrophic accident, we're talking severe injuries or fatalities, a $750,000 policy is going to dry up unbelievably fast. And that leaves you sitting there with a massive out-of-pocket risk that could easily bankrupt your business overnight. Let's ground this in a real-world scenario. Just imagine you're involved in a severe rear-end collision. You cause significant damage to another vehicle and severely injure the driver. The courts determine the total damages amount to $1.5 million. If you only have that $750,000 in liability coverage, your insurance cuts a check for their maximum limit and they're done. But that leftover $750,000, it doesn't just disappear into thin air. You are personally on the hook for that crippling debt. So let's see how this financial reality flips when we jump to the total opposite end of the spectrum. Section 3, the $2 million maximum. We're skipping the middle for just a moment to look at the complete opposite approach to coverage. The $2 million mark. This is the highest standard tier you'll hear folks talk about regularly. And while it offers incredible, massive protection, we really have to ask ourselves, is it the right fit or is it just total overkill for your specific operation? This tier brilliantly illustrates the classic trade-off in the trucking industry. The pros are fantastic. You get maximum protection, which is essential if you operate in high-risk areas or haul super high-value cargo. You get ultimate peace of mind. And crucially, having this level of coverage attracts way better, much more lucrative opportunities from large shippers who literally demand it. But the cons? They're purely financial. You are paying the absolute highest premium costs. For many smaller trucking operations with low-risk routes, it might be excessive coverage. You're basically paying top dollar for a titanium shield you'll likely never use. But hey, keep in mind, there is no magic bullet here. Even a $2 million policy has its limits. Let's say you're in an extreme multi-vehicle crash with extensive property damage and severe injuries totaling $3 million. Your top-tier insurance pays out its $2 million max, but guess what? You are still legally responsible for the remaining $1 million out of pocket. Obviously, it's vastly better than the lower limits, but it just goes to show that in truly extreme scenarios, you can still be left totally vulnerable. Okay, Section 4, the $1 million standard. We've seen the absolute minimum and the maximum. Now let's look at the middle option, which is where the vast majority of the industry lands. $1 million. It is the most popular balanced choice in the entire trucking industry today. Let's talk about why. So the crucial point is that this $1 million mark strikes a nearly perfect balance between true protection and premium affordability. It gives you considerably higher protection than the legal bare minimum, and honestly, it's adequate to cover most standard accidents, bodily injuries, and property damage you'll typically encounter. Now, the cons? Yeah, your premiums are going to be moderately higher than if you stuck with a $750K level, and like we just discussed, it still won't cover a massive, catastrophic multi-vehicle disaster. But for most businesses operating in busy markets today, this is just the most logical choice. Let's run the practical math on this tier. You get into a multi-car accident. The medical bills and property damage total up to $1.2 million. Your $1 million policy covers the lion's share of it. You are left responsible for the remaining $200,000. Now, make no mistake, $200,000 is still an incredibly painful pill to swallow. It's a huge out-of-pocket expense for any business, but compared to owing $750,000 or more, it is vastly more manageable and it's much less likely to immediately shut your doors forever. All right, Section 5, choosing your coverage. We've laid out all the numbers. Now let's guide you through actually applying this to your own business. Making this decision really comes down to 3 definitive steps. Step 1, consider your freight type. What exactly are you hauling? Step 2, evaluate your risk exposure. Where are you driving every day? And step 3, check state and client requirements. Who are you driving for and where are you registered? You have to sit down and honestly assess your operation against these 3 metrics. Here is how that breaks down in the real world. Say you've got a high-risk profile, meaning you haul specialized cargo, you're constantly navigating dense, high-traffic cities, or you want to land contracts with demanding premium shippers. If that's you, you absolutely need to be looking at the $1 million or even $2 million limits. Your daily operations demand it. On the flip side, if you've got a lower risk profile, say hauling general dry van freight out on open, rural, low-congestion routes, well, you might safely operate closer to that $750,000 to $1 million range. I want to leave you with this final, absolutely critical question. Is your trucking business truly protected, or are you just legally compliant? Because let me tell you, meeting the FMCSA minimums is just the starting line. It is absolutely not a shield against financial disaster. I highly encourage you to go talk to a dedicated trucking insurance expert. Have them assess your specific routes and your specific cargo. Please, don't confuse legal compliance with actual financial survival. Make sure your business is built to withstand the worst-case scenario. Thanks so much for joining me on this explainer, and hey, stay safe out there on the road.